In March 2009, the S&P 500 hit 676 points. The financial world was in free fall. Lehman Brothers had already collapsed. Retirement accounts had been cut in half. And everywhere you looked, headlines were screaming about the worst economic crisis since the Great Depression. Most people were paralyzed by fear, but a schoolteacher named Margaret did something that seemed absolutely insane at the time. She took $50,000 she'd been saving for a house down payment and put it all into a simple S&P 500 index fund. Her friends thought she'd lost her mind. Her family begged her to wait until things calmed down. Margaret ignored all of them. That $50,000 is worth approximately $590,000 today. She didn't pick individual stocks. She didn't have some secret formula. She simply recognized a moment that comes along maybe once or twice in a generation. A moment when fear creates opportunity. The kind of opportunity that turns ordinary people into millionaires. Here's the thing most people don't realize. We're living through a similar moment right now. Not a market crash this time, but something potentially even more powerful. A convergence of forces that hasn't happened in nearly a century. Forces that will transfer more wealth to regular people than any single event in American history. The number is $124 trillion. That is not a typo. $124 trillion is changing hands over the next 2 decades, and the vast majority of people have absolutely no idea it's happening. Let me show you exactly what's unfolding. The S&P 500 didn't just recover from the 2009 low. It launched into the longest bull market in American history. From March 2009 through early 2026, the market rose over 900%. $100 invested at the bottom became roughly $1,000. But the people who benefited most weren't Wall Street traders or hedge fund managers. They were teachers, nurses, accountants, and small business owners who simply kept investing through their 401ks and IRAs while everyone else panicked. The data tells a remarkable story. In 2010, the United States had approximately 8.4 million millionaire households. By the end of 2024, that number had nearly tripled to almost 24 million. The country added over 15 million new millionaire households in just 14 years. That's roughly the entire population of the New York metropolitan area becoming millionaires. Where did all these new millionaires come from? The vast majority weren't entrepreneurs who sold companies or executives cashing out stock options. They were regular people who participated in the market's rise through retirement accounts and index funds. According to UBS's Global Wealth Report released in 2025, the United States added 379,000 new millionaires in 2024 alone. That's more than 1,000 new millionaires every single day. Most of them got there not through dramatic windfalls, but through the steady accumulation of assets in rising markets. UBS calls these people everyday millionaires, those with between 1 and 5 million in net worth. Globally, this group has quadrupled since 2000 to approximately 52 million people. They collectively control over $17 trillion in wealth. The path to joining them is documented, it's repeatable, and it's about to get a whole lot easier. Now here's what makes the current moment even more significant than 2009. Something called the Great Wealth Transfer. According to Cerulli Associates' latest research from 2025, approximately $124 trillion in assets will change hands between now and 2048. This is the largest transfer of wealth in human history. Nothing in recorded economic history comes even close to this scale. To put that number in perspective, $124 trillion exceeds the entire annual economic output of every country on Earth combined. It's more than 5 times the current U.S. national debt. It's wealth accumulated over 8 decades of American economic expansion, about to cascade through the generations. Here's how it works. Baby boomers, those born between 1946 and 1964, currently control approximately 52% of all wealth in the United States. That's roughly $78 trillion concentrated in a single generation. The youngest boomers are in their early 60s right now. The oldest are approaching 80. Over the next 2 decades, this wealth transfers to their children, their grandchildren, and to charities. Cerulli estimates that Generation X stands to inherit approximately $39 trillion over the next 25 years. Millennials will receive approximately $46 trillion. Even Gen Z will begin receiving significant inheritances as the transfer accelerates through the 2030s and 2040s. But here's the critical detail that most coverage completely misses. The opportunity isn't just about inheritance. It's about the cascading effects that massive wealth movement creates across the entire economy. When $124 trillion changes hands, it doesn't sit still. It gets invested, it gets spent, it gets deployed into businesses, real estate, and markets. Every dollar that moves creates opportunities for people positioned to capture a piece of that movement. Think about the ripple effects. When trillions flow into investment accounts, asset prices rise, benefiting everyone already invested. When heirs purchase homes, real estate values appreciate, benefiting existing homeowners. When inherited capital funds new businesses, job creation accelerates across the entire economy. The wealth transfer creates rising tides across multiple asset classes simultaneously. Now, understanding where the money will flow matters enormously. Research from Bank of America and Merrill Lynch shows that younger investors have dramatically different preferences than baby boomers. 72% of investors between ages 21 and 43 believe it's no longer possible to achieve above-average returns solely with traditional stocks and bonds. This represents a generational shift in investment philosophy that will redirect trillions of dollars. Where boomers favored blue-chip stocks and bonds, their heirs show stronger preferences for alternative investments, direct company investments, and emerging asset classes. Artificial intelligence infrastructure is already capturing enormous investment in 2026. Clean energy, healthcare innovation, and digital assets are all positioned to capture disproportionate shares of redirected wealth. Real estate positioning will also prove critical over the transfer period. Markets where younger generations want to live may see intensified competition as newly wealthy millennials pursue home ownership. The data already shows this divergence. Median home prices have risen over 150% since 2000, but that appreciation has been highly uneven. The same $500,000 deployed in Austin versus Cleveland will produce dramatically different outcomes over the next 2 decades. But here's what strikes me most about all of this. Staying invested through the transition period remains the most reliable strategy of all. Margaret, the school teacher who invested $50,000 at the 2009 market bottom, didn't need sophisticated strategies. She needed 2 things: capital to deploy and the discipline to stay invested through the volatility that followed. The market has delivered an average annual return of approximately 10% over long periods. Someone who invested $500 per month in an S&P 500 index fund starting in 2009 would have accumulated over $250,000 by early 2026, not counting any employer match. But that journey included terrifying moments. The European debt crisis of 2011, the trade war of 2018, the pandemic crash of 2020, the bear market of 2022. At each point, headlines suggested the rally was ending. At each point, those who stayed invested captured the subsequent recovery. Goldman Sachs research shows that missing just the 10 best days in the market since 2009 reduced returns from approximately 17% annually down to approximately 12% annually. Missing the 25 best days cut returns nearly in half. And the best days almost always happen during the most volatile periods, when fear is at its highest. The same pattern will likely define the great wealth transfer period. Recessions, corrections, and crises will punctuate the next 25 years. Headlines will regularly suggest that this time is different. History suggests those warnings will prove premature, just as they did after 2009. So, what does an action framework actually look like? First, maximize your tax-advantaged account contributions. The $124 trillion transfer will be partially captured by people whose retirement accounts grow alongside economic expansion. For 2026, the 401k contribution limit is $23,500, with an additional $7,500 catch-up contribution available for those 50 and older. Max out your 401k. Max out your IRA. Use HS as if you're eligible. Second, maintain exposure to broad equity markets. Don't try to pick which sectors will benefit most. Own the entire market through low-cost index funds. As the wealth transfer flows into various investments, broad market exposure ensures you participate in aggregate growth. Third, develop skills that serve wealth movement. Understanding finance, estate planning, real estate, or wealth advisory creates direct opportunities to capture value from capital in motion. The share of millennial and Gen Z clients at high net worth financial firms grew from just 8% in 2021 to 25% by 2024. That trend is accelerating. Fourth, build cash reserves for opportunistic deployment. The wealth transfer will create moments of dislocation when assets temporarily misprice. Having capital available when others are forced to sell provides enhanced returns during periodic disruptions. Fifth, extend your time horizon. Think in decades, not years. The transfer spans 25 years. Position accordingly. Short-term market movements matter far less than long-term participation. Let's talk concrete numbers. A 35-year-old today who invests $500 monthly in diversified index funds for the next 25 years, roughly the duration of the great wealth transfer, at the historical average return of 10% annually, turns $150,000 in total contributions into approximately $665,000. Increase that monthly contribution to $1,000 as your career progresses, and the outcome at 10% becomes $1.33 million. Regular people reach millionaire status through consistency alone. The United States has seen a handful of wealth creation events that transformed ordinary people into millionaires on a massive scale. The post-World War II boom created the first mass millionaire class through housing appreciation and stock market participation. The bull market from 1982 through 2000 created millions more as 401ks expanded. The recovery from 2009 through 2026 nearly tripled the number of millionaire households. Each of these events minted millionaires who simply participated in economic expansion. No genius required, no insider access needed, just presence and patience. The great wealth transfer is the next chapter. $124 trillion will move over 25 years. Economic activity will accelerate. Asset prices will be supported. Opportunities will emerge throughout the entire period. The question isn't whether the transfer will happen. It's already happening right now, today. The question is whether you'll be positioned to benefit from it. Margaret didn't know in 2009 that she was capturing a once-in-a-generation opportunity. She simply recognized that fear had created value and she acted. The opportunity today is different in mechanism but similar in scale. Trillions of dollars are moving. Millions of new millionaires will be created. History will record this period as a defining wealth creation event. You now know it's happening. You know the scale. You know the timeline. You know the strategies. What you do with that knowledge, that part is entirely up to you.